So the question will be addressed is how might public banks help communities respond to this devastation? It's my pleasure to be speaking with Santa Cruz advocate Rafa Sonnenfeld, who is who is a public banking organizer and activist working to establish a regional public bank for the Central Coast of California, as well as a California state bank. He's excited about public banking's potential role in addressing climate change and California's affordable housing crisis.
Pleasure to be here.
Yeah, okay, great talking to you. So can you give us an update on what's going on in Santa Cruz? For people who don't know, Santa Cruz is just south of San Francisco on the California coast, and it's had
We're about
fires.
90 miles south of San Francisco, and if people have heard about the wildfires happening all across the West, well, we're right in the thick of things here. We had it's actually smoky right today. There are 3 raging fires in the region. Luckily, the one that was most damaging for us was something called the CZU lightning complex fire. And that occurred in primarily Santa Cruz County, over 80,000 acres of forest, and homes were burned. We lost over nearly 1,000 homes, and preliminary total damage is valued at something around $340 million, including public infrastructure. So we're just now sort of assessing the damage. There are still places that are evacuated. We had over 70,000 people who were evacuated over the course of this fire, and it's going to be a while before our mountain communities are recovered from this natural disaster.
Wow. And what kind of disaster relief in particular would you be looking for? I suppose just rebuilding homes, right? Mortgages reasonable mortgages for home buyers or home builders, reconstruction.
You know, it's everything from home rebuilding to business continuity. You know, we have a pretty substantial winery industry in the mountains, and some of our vineyards were wiped out. So yeah, all the sorts of things that that happen, whether it's damages to businesses or to homes, we were looking at recovering from all of that. There were over 1,400 structures that were destroyed in the fire, 911 single-family homes, 148 commercial or mixed-use structures.
Wow.
So that just gives you a sense of the scale of what we're going through.
Yeah, so, and I know you have a lot of homeless there too, which is another thing that we definitely need to address in California. I'm in Los Angeles, but we also have a massive homeless problem. So we do.
Yeah, even before the wildfires, Santa Cruz County had one of the highest per capita rates of homelessness, and some of our most affordable housing was in the areas that have been desolated by the wildfires.
Yeah, that's terrible. Well, and I know you're working on public banking, which is great. Of course, we only have one model so far, the Bank of North Dakota, but it does have a pretty impressive record in disaster relief. Particularly, it's been hit with 2 big floods. There was one in 1997 that 50,000 people had to evacuate the city, which was the biggest evacuation since the Civil War across the whole U.S. country. And there was property damage in excess of $3.5 billion. But the Bank of North Dakota stepped right up with loans. So they made $70 million available in cheap credit lines. And this was for various disaster relief agencies and for homeowners and farmers. They're particularly big on farmers, of course, and students and businesses. So within 3 years, they had only lost 3% of their population. And right on the other side of the river, East Grand Forks in Minnesota had lost 17% because they didn't have that same arrangement. And then we've seen just in the current crisis, North Dakota has performed much better than the other states with, let's see, with they're coordinating all their community banks. Of course, they have 6 times as many community banks as any other state. And they've managed through their community banks to distribute unemployment benefits 10 times faster than the slowest state, and to help small businesses secure more payroll protection fund loans per worker than any other state. So that's what we'd like to duplicate that. But of course, one major problem is it takes a while to get public banks set up. What I have great for is a national infrastructure bank. The one that looks the best to me is HR 6422, which would actually be a depository bank, and therefore it can take advantage, and so could a state public bank or a city or county or regional area public bank can take advantage of new rules by the Federal Reserve, where they've eliminated the reserve requirement. That means technically you don't have to have massive deposits to back your loans. You could just make the loans. And that's what they're talking about with this National Infrastructure Bank, that the bank would do like any other bank, which is create money on the books as loans. And then these would be like in like Roosevelt's Reconstruction Finance Corporation, where they're called self-funding loans. They're the type of thing that pay back. So they're prudent loans, in other words. It's not like they're just giving money away. And it worked. They rebuilt the country and it turned a profit for the government through the Reconstruction Finance Corporation. And that's what this new bank would do. But that, of course, would be federal level. We could do the same thing at a state level. I know or at a big city level, or a collection of cities. I know one thing that always stops the states is that the treasurers object to doing like North Dakota does, of putting all their revenues in this bank. But for example, in California, John Chung, who was our treasurer in 2008, said, well, what happens if we spend all our money? What if there are no revenues? And they did that in 2008 and had to issue warrants. But now, because the Federal Reserve has eliminated the reserve requirement, you could put your deposits in the bank, and then the state or cities could withdraw their money. You could go down to zero, and you could just go right to the Fed's discount window. That was the other thing they did. They opened up the discount window at 0.25% for any bank in good standing. So that's, as long as we can establish our creds in the beginning, establish that we're a bank in good standing, then we could run our deposits down and it wouldn't matter. We just go right to the Fed for this very cheap liquidity. So, and what are you all doing up there in the public banking arena?
So, as was mentioned in the introduction, I'm focused on 2 areas. One is on establishing a regional public bank for the Central Coast of California. We're envisioning essentially a bank that would be responsible for an area from running from Santa Cruz County down to Santa Barbara County, and that has already been basically legalized by AB 857, which became law last year, and we're really in the process of just the sort of technical work and getting some buy-in from the regional governments to move forward with the essentially creating the business model for that bank, and the county of Santa Cruz, our board of supervisors, has already signed off on exploring this idea and is potentially willing to help fund the work that needs to be done in order to create the business model and to fund what's called a viability study, which is a requirement of the state law in order to create this bank. But in addition to that, we've also been working on establishing a statewide bank, which would have sort of a different focus. In 2020, we introduced SB 310, or excuse me, AB 310. I think it was AB, which is the California California State Bank Initiative. Yep, and that was to essentially create a state public bank out of an existing small business loan program, and to utilize the capital that's basically already sitting in bank accounts in something called the PMIA, which is essentially the state's checking account for cities and counties, and take a small percentage of that investment and turn it into an expanded loan program.
Yeah, that's great. I see a question, cheap credit lines, what interest rates or terms were they able to achieve? I don't actually know in 1997, but I know
so in North Dakota, some of their disaster loan programs are like at 1%, which is substantially cheaper.
Now they have very cheap.
For something like recovering from the wildfires that we're experiencing here in California, the primary mechanism for recovery comes from loans issued by the Federal Small Business Administration, and there are different types of loans. Some of them are directly loaned by the federal government, and some are basically subsidizing private bank loans, guaranteeing the loan on behalf of the private bank, and those loans from the Small Business Administration are typically around 3%, which is still pretty low, but there are other challenges with the large bureaucracy of the SBA. It has to cover essentially the entire country and all of the natural disasters and civil unrest that's happening all over. It's notorious for having delays in processing loan requests. Things that should take 2 or 3 days can take a month or more for some of these, like the bridge grants, and while the more substantial loans get processed. It's notorious for running out of money when we need it most, and it's also requires the support of Congress to allocate funds to keep it continuing to meet the needs of people experiencing disasters.
Oh, I see Nicole is asking a question. Rafa, what are the immediate unmet needs happening now as a consequence of the fires?
So uh, right now we're sort of in limbo, and bec- and what I mean by that is our natural disaster is not over. Our fire is essentially contained, but when we have a forest fire, one of the things that it will do is it will change the chemistry of the soil, and we are anticipating having basically mudslide events this winter that
Wow.
are going to be unpredictable. And the only thing that we'll be able to do this winter is evacuate again. And so we want to be rebuilding and recovering soon, but we don't know what's going to happen this winter uh, when these mudslides happen, and so there's some questions. Do we immediately start rebuilding homes in the same place? Uh, there's a lot of soil, basically erosion control kind of stuff that has to happen, and homeowners are actually responsible for determining the safety of their land to rebuild on. So right now it's essentially a waiting game with applying for insurance payouts, applying for FEMA grants, and for applying for SBA loans to help through the recovery. But it's literally a rebuilding process right now, and as well as businesses are, we also have a pandemic right now, and there are businesses that have to make payroll and make rent and all sorts of things. So
Yeah, that's
that
why I think a national infrastructure bank, or if we could get our state banks going, are our best options here. A national infrastructure bank would put millions of people back to work, rebuilding all this devastation all across the country, as well as, regenerating our local economies with new money that would go in there from spending from all these people that would get paychecks, but also it would allow businesses to get back on their feet and start manufacturing again. So, and it could all be done without increasing taxes and without going further, for the government going further into debt. It would just be the whole system on which our banking is, or our money supply at the moment is based. 97% of our money is created by banks when they make loans, according to the Bank of England. It's a little less here in the US, but anyway, it's still over 90%. So a national infrastructure bank could do that. It could just take off with this is what the Chinese do. They own their own banks. They own their national banks, their national infrastructure banks, and they have counties or provinces that own their own banks. And so they just issue the money to build what they need, and then the loan is paid back from whatever is built. I mean, I actually think the ideal solution would be for the Fed just to issue the money directly, not even as a loan, but under the system we have. That would take some congressional action, and it seems to be difficult to get Congress to do much of anything. But the Fed is really actually eager at the moment to spend money. They want to generate some inflation, and they really want Congress to spend money. That's what Jerome Powell has said, that they're now going to do inflation averaging, because they didn't even get up the way they measure inflation. They didn't even get up to what they were aiming for over the last few years. So they could go over a bit and it wouldn't hurt. That's their theory. But obviously they could go over right now, because we need to get a lot more money into the real economy. There's plenty of money in the financialized economy, but it's not going to we the people, or going to the local economy, the local government.
Right, and one of the I guess roadblocks to getting money out quickly to people who need it most has been the bureaucracy of the federal government itself. The SBA program is underfunded. I believe Trump cut it by 10% or something, and they're having a hard time meeting their legal mandate to process all of the loan applications that they receive. So we need to have uh, more funding capacity, but also more ability to process individual loan applications, and to just have that capacity to connect people directly with relief, and to do it in a much quicker process than what we're experiencing now. The delay itself actually hurts our economy as well.
Yeah, totally. I know the Federal Reserve is also talking about allowing people to have accounts with the Fed, which I know is controversial. People think that's going to put the Fed in control of everything. But if we could get control of our government, if we, the people, could actually get control of our central bank, which should be the top of a national public banking system, if we actually had control of that mechanism, it's amazing what we could do. And we could do it very quickly. If everyone had access to a bank account directly with the Fed, they could just pay out as needed. We could do it as loans, or you could do it as payouts. There are a lot of potential if we had a responsive government that was actually responding to the will and the needs of the people. But you clearly expressed the needs of the people there. I see Nicole ask if there was going to be a problem with water, if you have mudslides, is that going to
Yes, we don't know exactly what sorts of problems specifically there will be, but we are definitely concerned about mudslides contaminating our water supply, and we're looking at creating essentially temporary dams and things like that to try to mitigate the expected erosion that could infiltrate our water system.
Okay, I know we were going to leave the last 5 minutes or 10 minutes for questions, but I don't see a lot of questions. And if you wouldn't mind going into that, I did see one objection that the fires really weren't as bad as we're making out to be, although I think they really are. They certainly have been in the last few years. I also have relatives up north, pretty devastating. But anyway, if you wouldn't mind just going a little bit into the homelessness issue and what you've tried to do, and what the needs are, and how maybe arguably, hopefully, if you ever get a public bank in the one you're working on, how that might help.
So I'll try to also keep this in context of the wildfires a little bit. So I work in homelessness. I help manage a shelter in Santa Cruz County, and I served on the community advisory committee for homelessness for the city of Santa Cruz. And it's my firm belief that the causes of homelessness are directly related to housing insecurity and the affordable housing crisis that we're experiencing here. Santa Cruz is depending on which metric you look at, virtually always in the top 10 least affordable places to live in the country. Some of our most affordable housing has been in the mountains, where we had the fires. And like I mentioned at the beginning of this broadcast, we had nearly 1,000 folks lose their homes in the fires. Many of those people are still living in hotels. They might be temporarily allowed to live in trailers on their properties while they're waiting for for the recovery funds to become available to rebuild or whatever the case may be, or they may just decide that they're going to leave the region entirely. And the potential for public banks to directly finance affordable housing projects, I think is really one of my biggest reasons why I started becoming involved in this effort. Affordable housing in California is ever since the elimination of our redevelopment agencies has been really challenging to finance, particularly in our region, and so we need new sources of capital in order to build and to preserve affordable units for people making under say 50% of the area median income or lower than that, and those are the folks who are most prone to housing insecurity and becoming homeless. So, you know, whether it's just because of the cost of living or because of a fire happening, I think we're seeing there's a potential for public banking to help improve that situation for reducing the rate of homelessness that we're having, as well as to I guess change some of the economic incentives to so that we don't necessarily sprawl out as much into our wildland urban interface in the mountains, which is one of the only places left that people can affordably live.
Yeah. Well, good luck to you all up there. I know in LA, I mean, we have a huge homeless problem, I think partly because we have good weather, and so do you. I mean, everybody wants to live in Santa Cruz. It's a beautiful place right there on the coast. But then you've got people crowded together. You've got all sorts of health issues, rats and things like that. I mean, it really is something that the city needs to deal with. Any city needs to deal with. And particularly where I am, like Los Angeles, the city has lots of money that we could, if we can generate credit with a bank, like literally create money through our bank. And if we don't have to worry about the reserve requirement, which was, it used to be you had to have enough deposits to cover all your assets, which were your outstanding loans. And that's a lot of deposits. And the city would want like 1% on its deposits, which is what it used to be making. I kind of doubt it's that high now. But if you count that in as one of your costs of doing business, it was kind of hard to work up a business model that, that would work. But now that the Fed has allowed any bank in good standing, we just have to show that we're in good standing, I think. I mean, have a few years of that will take a while, which is unfortunate, or even buy a bank that's already in good standing. That's possible. But anyway, any bank in good standing could borrow for almost nothing at the Fed. And so we don't even need those deposits. And we'll be generating new money, putting it into the local community, and we can get all those businesses back on their feet, give them low interest loans, like whatever, 0.5%. If we can get it for 0.025%, we could be making loans at 0.5% and still be turning a profit. So anyway, I think there's a great potential there. We need to make people see what we're talking about here and why this would actually work. So thank you very much for your efforts up there in Santa Cruz, and I wish you all the best and good luck.
Thanks for having me.
Good talking to you.